Alright, my people, we're alive. Let's do this. London session has started, the market has opened, and let's jump into the markets ASAP directly. Watch what's going on, because I'm actually looking at gold. Gold is very interesting today. We have a very nice entry. So we missed the spot actually, but if we're lucky, the price comes down to retest this area. I'll show you in a second. All right, so we're there now. So you see this crossing that is about to happen between the 20-day and the 200-day EMA. I want to see gold come down and retest the 200-day EMA, which conflues perfectly with a 38.2 Fibonacci retracement of the bigger swing that we had. So I want to see price come down, retest, which would be the 1829 until like 1827 area. That's our entry area for our buy. So here, this is the area for a buy. Now, important to understand here. So this is the area for a buy. Let's make it white instead, so we can distinguish the color. Yeah. Important to understand here is that you see these lows here. If market now comes down to this area, we want to see first if it passes these lows. All right. If it breaks these lows, we don't enter the market until we have it back up here again, because this is where we want to enter. We don't want to enter below. We don't want to enter above. All right. So we're waiting for this to happen. So now I'm going to set an alarm here so that we are ready when that happens, so that we get alerted when that happens. And hopefully we'll have a nice buy there, a nice entry to gold. What we can do is we can already set out the stop losses so this trade is ready to launch when it's time. So let's clean the chart up a little bit like this. Clean some of this stuff up. Yep. All right, cool. Alright, cool. Let's do it like this. Let's put Fibonacci from this top to this bottom. Let's go to the 4-hourly time frame so we get a more precise Fibonacci. Yeah, that's good. And now let's make this one pinstriped so that we can distinguish between these two Fibonaccis. We have this line here, you see, from the biggest swing, and then we have these small lines from the smallest swing. All right, and what we then see is the first level is the 23.6 Fibonacci retracement. So that's the level right here, and it conflues perfectly with the resistance that you will experience, that the market will experience at the zone, as you see. Now that is a very big take profit, so we're looking for to catch some smaller take profits. Just gonna mark out these zones. So we got them. I would argue that the ultimate level for this trade would be up here at 1863 almost. But just to make sure, I would say 1862. Let's go to the hourly time frame again and see if we can get some nicer levels. Yeah, first take profit is definitely here because we got the demand zone here as well. Sorry, the supply zone. You see this, these two red lines from the Fibonacci retracement tool, the 78.6 and the 88.6 Fibonacci retracement. That is the supply zone right here. A lot of supply. Market comes up, people selling off here. Market comes down again. Right now we're playing with the sweet spot, as you see. Acted as resistance first, a little bit support, broke beneath, broke above again, support, resistance, now we're above it. I think we will come down and retest it. So there's a very big chance actually that the market comes down here to 1831 and bounces off that zone. So first take profit is here. TP1. That's first take profit. And I'm gonna do like this. I'm gonna do like this as well. Clean up a little bit. It's very messy right now on the chart. Next take profit is here. Right underneath. 1842. And don't worry, I'm gonna write them and send them in the chat box so that you guys got them. Sorry, not in the chat box. I'm gonna send it in the signals channel. So if you're not in the signals channel yet, then join it. You get the link in the description box. All right, let's see. Yeah, next take profit will be here. And the last one, I would keep it open and close it. We don't even need to keep it open. We can put the target directly. TP4. If you want to go all in on this trade, you can put a TP5 as well, right at this level. Or you can put TP6, TP7 as well, but this is what I'm looking for. Okay, so now the stop loss, the most important thing. And remember my training on risk management. If you didn't see that, if you got problems with risk management, with blowing up accounts, watch my training on risk management. Very important. You want to be a profitable trader in the long term, and to be that, you have to have proper risk management. And remember also that trading is not a getting rich quick scheme like most people tend to believe, because they see a lot of this stuff on TikTok and Instagram. But guys, trust me, it's not a get rich scheme. Like you can make a lot of money very quick, but you can lose it just as quick as well. So, and that's just gambling. Then you might as well go play poker or something else. So if you wanna develop a craft that you can use in life, that you can that enables you to work from anywhere in the world as long as you have Wi-Fi internet. If you want to master the markets, you want to understand what's going on in the markets, and you want to be able to make a substantial amount of money, learn the skill of trading. Like you can take signals and stuff like that, trade setups that I send out, that other people send out, but learn the skill. That will help you a lot. Even if you take trading signals, you will still profit a lot from or boost your profits from learning about trading. Now, nothing is happening here. We're still waiting for the market to come down to our entry zone. So we have our alarm set, so we're letting that be for the moment. And we're just looking into, I have another one that I'm interested in, and I want to look at. I saw a setup coming up, and that is AUD USD. So let's go on a bigger time frame. Let's go on a daily time frame and just sum it up quick where AUD USD is. So first off, you gotta understand that AUD USD, like the pair, is very low. So you see, like it's not far from its all-time low. All right, and zooming in a little bit, then we understand that yeah, the market would wanna move up because it's oversold, and right now we are on an uptrend. So let's look at this uptrend, by the way. Let's look at this retracement, by the way. Oh, that's interesting. Okay. All right. So what's going on here is that I would argue that the market needs to come down to the sweet spot, to the zone. So probably bust off the 38.2 Fibonacci retracement from underneath, so as resistance, and then come down here, pick up liquidity. We have a lot of liquidity stuck in this range here. So you see this candle, a lot of unfilled orders. Now, why do I see an opportunity here? Okay, first off, let's go to Manara. So Manara just called out a triple top here, basically Elliot's wave. There's wave 1, wave 2, wave 3, and correction. But this correction is breaking. Don't mind these stop losses and entries that you see here. We're looking at the structure here right now, in this pattern that is formed. So this top here is market is breaking this top right now. And it's testing it, but it looks like it wants to push through, which means this structure here is broken. This elite waves with the correction afterwards, ABC correction afterwards, it's broken. So we're looking at a new wave forming. And when you see things like that, what does that mean? That means that you got a lot of volume in the market pushing up for the structure to break like that. So let's go to the lower time frames and see what we got. This is the structure that we just broke. Now, here's another thing. We're looking at this with good manners. This here is the structure. Then what happened? Stop hunt. So all these stop losses that were here, market came down, washed them out, triggered all these stop losses, and it's now pulling upwards. So now when we're looking at this, that's why it's so important to skip it, to jump between different time frames, because when you jump between different time frames, you see things from different perspectives and different angles. So now when we came to a lower time frame, what did we see? We see that this setup is actually very clear. Market came down, stop hunted all these, or triggered all these stop losses here, picked up liquidity, and started to pump up. And the question then is, where will the market go? Well, first off, the market will come to this 38.2 Fibonacci retracement and test it from underneath as resistance. And from there, the question is, will we see a sell? I would argue no. Oh, sorry, I would argue yes. I definitely argue yes. And that is back to the thing that I said in the beginning, where when looking at AUD USD, is that I believe that the market is going to test the 38.2 Fibonacci retracement from underneath as resistance and come down to the sweet spot to clear some of the this liquidity here. So this is what I'm seeing for it. So we're looking for a sell. We're looking for a sell setup. And we will check the fundamentals in a second, just to confirm that we are not, talking rubbish here. As you see, the 38.2 Fibonacci retracement, this one from underneath, it correlates perfectly with this support, which will be resistance. So entry zone is here somewhere. That's the entry zone. Let's take a look at Forex Factory. If you can get Forex Factory, get it. Forexfactory.com. Costs you nothing. If you don't know what it is, it's a very good platform to see what's going on in the market, news. Also got like a Forex calculator where you can calculate, pips, your risk management and everything, which is, as I always say, very important. What do we got? What do we got? More. All right, so let's see, March 1st. And by the way, it's the first of the month. March. Oh, you see this? Damn. This is what AUD is running. So I'm gonna be honest, I missed this. I totally missed this. We had news actually. We had the CPI reading of the Australian dollar. Very important. Affects the market a lot. 4 p.m. we have the USD ISM manufacturing. To be honest, I don't even know what that is. Let's check it out. Level of a diffusion index based on surveys purchasing managers in the manufacturing industry. Okay, so the important thing we gotta keep in mind here is if the forecast is if the report is greater than forecast, it's good for the currency. All right, so that means it's good for the US dollar, and we know when it's good for US dollar, it's bad for pairs for currency pairs that are paired against US dollar. It's bad for gold as well, that we trade a lot. So when US dollar goes up, currency pairs that are paired against US dollar goes down, gold goes down, and a lot of other stuff goes down. Some indexes goes down as well. You'll see most often a lot of stocks, major stocks, go down as well. Because what happens is that people pull the money from stocks, and it's not even people; it's mostly institutions actually that pull the money from the stock market into the currency and keep the money in the currency, the US dollar, because the US dollar has such a good and it's pumping, so they're making more profits on keeping it in US dollars. When they see the US dollar dropping, they're pulling it out, pushing it into the stock markets. That's why you see the stock markets pump when the US dollar drop. That's how it works. And anyway, so that is 4 p.m. We'll keep that in mind. But right now, the important thing is the Australian dollar, because that's what we're looking at. And what it's telling us, it's that if it's greater than forecast, then it's good for the currency. What did we have? We have lower than forecast. Forecast was 8.1%. Is this forecast? Yeah, forecast, exactly. So forecast was 8.1%. and we had 7.4%. That's lower than forecast, so that's bad for the currency. So that should affect the Australian dollar in the opposite way, and that's why you see struggling right now. All right. As you see, we got some form of structure here. Question is, where do I want to put it? I'll put it in here. We'll let it ride for a while and see what happens. As I said, this market needs to come up here for us to find a sell in this. So we want to see now if it bounces off this trend line from the top side, from the support side, so to say. Let's go back to gold. Nothing has changed in gold. Okay, so it's rejecting the 20-day EMA, as you see here. And what we need to see is gold breaking the 20-day EMA, coming down to our entry zone for us to enter for a buy. Guys, let me know in the chat box if there's any certain pair that you want me to analyze, to check. Type it in the chat box if there's any special currency that you want me to dive into. Yeah, this gold market is undecisive right now. Then we gotta keep in mind also that the US market is closed right now. So when the US market opens in what is it? 3 hours, 6 hours, 6 hours, then you will see a lot of volatility here. AUD CAD, let's do that. Funny that you say it, because I was thinking about AUD CAD before. So, 1 second, guys. I just have to get my charger. I see my batteries are dying. That wouldn't be nice for the stream. Let's do this. AUD CAD. All right, let's look at the fundamentals first, because I saw that there was a folder for AUD CAD. Yeah, exactly. So we got this one. So let's see what it says. Same here. Actually greater than forecast is good for the currency, and we had lower than forecast. Same thing. So CAD should drop from this news. And this is the GDP reading. Let's go to AUD CAD. Oh, sorry, already there. AUD CAD. Where is it? There it is. I had a major trade on this one before. I called it out in the chat as well. That was when it hit here. After that, it came down and just broke everything. Let's look at this from beginning, from scratch. If we got any free minds here, or anybody from EA, then we got people that probably experienced ITINA, some ITINA stories. And ITINA definitely been married with AUD CAD. Has been performing phenomenal, but this AUD CAD was a horror story. We didn't like that. All right, so on a bigger time frame, what we see is this, and you guys see this as well. So we pull Fibonacci from this bottom to this top. So it's this whole swing, basically, this whole sequence. And you have seen this liquidity zone here, or this sweet spot zone acting as support. I've seen the 38.2 acting as support, the 23.6 acting as resistance. But what has happened now is the market broke beneath the 38.2 Fibonacci retracement, came back up, and is actually using it as support right now. So let's go to the lower time frames. So we have support from the 38.2 Fibonacci retracement. We want to know that. This is our support. Which conflues perfectly with the 20-day EMA support here. So that makes, what that tells us is that the support got confirmed. So now it's even stronger support there. And let's do this. All right, so what has happened is that the market came up to the sweet spot zone here. And you see that market has been playing around this area. There's some orders. And there's a lot of orders there. And basically what will happen now, what I think will happen now is, considering that CAD, that the fundamentals for CAD was, the news came out, the report came out better, or can I say better, but lower numbers than forecasted. And as I said, what it does is that makes CAD drop. But in the same time, we had also news for AUD, right? And it was the same thing. It made the Australian dollar drop as well. So both of these should drop due to the news. And what does that do here? Takes both of them out, because both of them can't drop against each other. So right now nothing is happening. The news didn't affect the market, so we let it be like that. This is what's happening right now. So basically, I think it's the technicals that will determine here what will happen next. And when we look at the technicals, the market should. Wait, let me just check this again. Yeah, definitely. Looking at the technicals in the long term, the market should actually drop from here. So at the bigger time frame, at the bigger scale, market should go down. Let's remove this one. We know that we got the zone. Let's do like this. This is where the liquidity is. And this is where the demand is. So on a bigger time frame, this is what I see. I see market, because right now you see this. We are ranging inside the sweet spot zone from this swing, from this low to this top. So it's this sequence here, this Fibonacci sequence. And we're ranging in the sweet spot zone, and I see market actually rejecting this here and coming down to this sweet spot zone, which conflues perfectly with the demand zone down here from this low swing. So to make it less confusing, this sweet spot that you see here, the bigger sweet spot, is from this bigger swing, all right? And this demand zone that you see here, these two red lines are from this swing, so from the smaller sequence. And you see them, they cone flew perfectly down here. So this is definitely a very, very, very attractive area for the market to retrace to. This is a very attractive area for the market to retrace to, and you see also that it conflues perfectly with the support that we got here. All right, here's the support. So I see the markets coming down. I wouldn't enter any trade here. You could argue for a sell, that the market will drop, and we could enter a sell here, all the way down here. But for me, this doesn't look attractive for a sell, because this might as well do something like this and then come down. You know, so we don't want to get any stop losses done. We want to profit. So in this case, I would just wait for the market to come down to this zone and analyze the situation and see if we got a buy opportunity from there. All right. But this is what I see. I see the market coming down here. I don't see it passing these highs. That's it. We got downtrend forming here. We got a structure, a bearish structure forming here. Yeah, and then you see this also confluently. We will have the 20-day EMA on a daily time frame that will reject as well. Yeah, so that's it. Market is going down, probably going up a bit and then going down. Oh snap. Guys, I might take that back about the trade. I see something very interesting here. You see this? I love this type of confluences. This is when you see an area that gives a lot of resistance due to the Fibonacci level, and then in the same time it conflues with a 200-day EMA on the hourly time frame, which makes this a very good sell entry. Basically right now. No, not right now. It was already. So let's go to the low time frame and see what's going on. I see. So it's rejecting the 20-day EMA. So guys, this one is interesting. I gotta say that this is a very, very interesting sell that we got here. What I don't like is that we already knocked. If you remember my training on support and resistance and breakouts, we already knocked it 2 times. If we come up again and knock at this resistance again, there's a big chance that we break it. For every time we knock it, it becomes weaker. $92,100. Let's see. Oh, that's exactly where we are. 92,100. All right, so I love that you're sharing that, Martin. All right, so your sell is confluent with what I'm seeing here. Now, but before we enter the sell, we want to see the market come up to this area. But let's see if we can find something, if Manara got something for us on the AUD CAD. Let's see if we can get some confluence here. Yeah, it's also pointing at a sell, but it's much higher. It's a whole different trade. It's a lot of trades that already went. And Monero had a lot on AUD CAD. Let's look at this butterfly. Oh snap, this one ran and it went good. Now, nothing here right now from Monero. What is gold doing? Gold is still rejecting 20-day EMA, but it's getting closer. Let's get back to this. All right, so just to summarize this and be done with AUD CAD. And by the way, Martin, thank you for sharing, brother. So I definitely see a very attractive trade here, and it's a sell from this area here. And that's the, as Martin called it up very nicely, the 0.92100. That would be the entry for the sell. Just want to check one more thing to get a confirmation on this one. I want to check, where is the volume? Okay, we can't see the volume now. Oh well, don't forget about that. What I'm doing right now, I'm just studying the market. I want to see. I want to see if my eyes can detect something more that is of significance for this trade. And of course, when I see something, I share it. But I'm actually advocating the not to buy. So I'm trying to see if there's something telling me that we shouldn't go into this to the sell if it enters our sell target. But nah, man. But because look at this. This is why it's also super interesting. So you see you see how strong this whole area is as support and resistance. This is actually a key level. You see, like market is really respecting this area. So it's definitely a reversal area, a reversal zone. Oh, this is good. You see this? We got another confluence showing that we can get a sell here. What is that? That is that we got this sweet spot here. Sorry guys, a lot of lines here now. It gets confusing, but we got this to this. So this zone. And that sweet spot, where is the market right now? It's inside picking up liquidity. Love that, love that, love that, love that. Let's see. Let's do like this. Let's do like this. Let's do like this. And now what we do is we do Only problem is that market is rejecting this 20-day EMA, so, and it's confluent perfectly here, as we spoke on before. But the problem is, will it come back up to our entry zone? Yeah, this is definitely a sell. So we don't have to do anything more here. We can just look for our levels, hit our targets, find our targets, and that's it. So the most definite target is definitely the bottom of the sweet spot. So this whole trade will actually be inside the sweet spot zone. So we want to see the bottom be the bottom of the sweet spot, which conflues perfectly with this whole support zone that we got here. Now let's find some levels for our take profits and for our stop loss. If this market now reverses and hits our entry. Let's do this. So basically that would mean that we got a swing with a top here. Next one will be here. Remember what I said, I'm always putting this take profits just above the Fibonacci retracement level, because sometimes market plays with us and reverses just above it. We don't want that to happen. And then we got, yeah, exactly the bottom there. And I would put it just above. I would put it like, do we got any round numbers here? 91, 3. That's a nice number. 91, 0.91333. And we put an alarm about here, and then we're just hoping for the market to reverse, hit our entry, snap that upgrade. But I would definitely put a sell limit here. I see market reversing here. If we didn't already miss it, when market was up here, if it comes back up, I can see reversing. So I will put a sell limit here. So I'm gonna call this one out in the signals channel, and you'll find it there. So you just copy and paste it from there. This is what I'm looking at. Now with that said, let's remove this a little bit so it gets a little bit clearer here. Don't like that we missed that one. So now what's happening is this. Market will bounce off this red line, which is a 20-day EMA on the 5-minute time frame, and come back up. But I don't like that we already passed. This was our entry here. This was our entry. We should have got in. We would have been on our way to TP1 now. Let's just wait and see what the market does. We have our alarm set. We have everything set. Let's just wait for it. What is gold doing? Not much. Gold is still not much happening. All right, guys, I'm gonna leave it like this. Bitcoin is still here. We're still in a trade, in a swing trade. This trade that I call it, when was it? Last week? Last week? It's been in here for a while, but we're still a major profit. So our last target is what we're waiting for. Last target is here. This is our last target. And 22,200. So that's it. So we hit all take profits except for the last one. With that said, guys, thank you for watching. Thank you for listening. I wish you guys a blessed day. Stay prosperous, trade safe, and I'll see you guys tomorrow.